Fibonacci tool is one of the best tools on the MT5 platform. So if you want to know how to set it and how to trade using it, stick around and have the patience to watch till the end. So I've divided today's video into 5 parts, right? So those are the parts that I'm going to be sharing. Okay, so for the first part, what you must do when trading the Fibonacci, right? So right here we're just talking about how you trade using the Fibonacci, what you look for first, right, before drawing the Fibonacci, right? So this is just talking about market structure, right? You must know the trend first. Find the clear trend before you start drawing your Fib, right? So right here, if the market is in a downtrend, right, you only be placing your Fibonacci looking for sell setups, right? You won't be looking for any buy setups, right? So that's what we'll be doing, right? So for market structure, as you can see right here, we're in a downtrend, right? We're breaking lows, right? We're creating lower lows, a series of lower lows right there, right? And a series of lower highs, right? Series of lower highs, right? So here we are looking for sell setups only because we're in a downtrend, right? So that's the first one. So that's it for that's for the first part, right? So firstly, you just have to identify the trend, right? If you want to know more about market structure, I've got a video that I talk about market structure. You can check it down in the description below, right? And it will assist you more on market structure so that you don't get this wrong, right? Then for the second part, how to draw the Fibonacci, right? So how to draw the Fibonacci, right? Firstly, right here, right? Firstly, we go to our tools, right? Use the Fibonacci, right? So right here, the Fibonacci we'll be marking. So here we are looking for it is for a sale setup, right? So we mark highest point reached to the start from the highest point going to the lowest point, right? So if it's a sale, right, we start from the highest point going to from the highest point to the lowest point, right? And if it's a buy, right, we will go from the lowest point to the highest point before break market structure, right? So right here, right, we've got breaking market structure, right there. Right, as I said, if you don't know more about market structure, you can check out my previous video, right? Breaking market structure right here, right? So the high that was created before this break right here, right? So we're making this high, right, to this low before the retracement started, right? So that's how you draw your Fibonacci, right? Let's say we are doing for a buy, right? Go to your tools, right? Then we mark from the lowest point to the highest point, right? From the lowest point right here, the highest point right there, right? So that's what we'll be doing, right? Though this is not a valid not a valid buy setup, right? So that's how you draw your Fibonacci. If you've got any questions, you can leave them in the comment section down below. And if you've got any suggestions for videos or anything, leave them in the comment section down below, right? Now for the third part of this video, now we know when to draw the retracement levels and how to draw them, right? So now we want to know how to use levels, right? So the third part, how to use the levels that we would have marked. So go to our tools, right? We take our Fib, right here, and place it right there, right? So like this, from the highest point to the lowest. So where do you put in the data? How do you put the levels, right? So here we've got many levels right here, right? So personally, as for me, I use from the 62 to the 70, right? And at times I use the equilibrium, the 50%, right? So how do you use these levels, right? You don't use the exact level, right? We take this for range, right? That's like what we do for supply and demand, right? So as you can see, we've got an order block right there, right? So we don't take just one point, right? We take the whole region, right? So that's what we'll be doing for the Fib levels also, right? So if the candlesticks pull back to the 60, doesn't mean you have to reverse exactly there, right? And come back there or in between the Fibonacci. As long as it has reached what levels that we want, right, you can take what the trade. So you don't have to think of it as an exact point, right, this exact point only, right? Even if it comes to here and retraces, right, it's still a valid one setup, right? Just as long as if you see what the candlestick confirmation, right? So that's how you do it. Now for the fourth part of this video, right, adding the levels, right? So most of you don't have what the Fibonacci marked up like this, right? So right here, firstly take your Fibonacci and draw, right? Doesn't matter the levels, right? And then what I want you to do in order to edit these levels, right, you have to long press the Fibonacci, right? Long press, right, and go to this pencil right there, this pencil here, right, this pencil, right, and now here we go to where it says levels, down here, down to the bottom, right, where it says levels, right, press right there, right, and then if nothing shows up, if there are no levels, you press the pin button and press it again, right, the levels will show up, right. So for levels, right, we're going to have all these levels marked down, right. So right here, our first level is going to be level 0, right, level 0, label, copy exactly as it is. You can take a screenshot of this, right, copy it as it is, right. 0 will be scaling TP, right, 0.5 will be equilibrium, 0.2 62%, you can say 62% OTE, right, OTE, and we've got 0.705, we mark it as 70% OTE, 0.79%. Just take a screenshot of this, right. After taking a screenshot, click done, right. Right here we've got our stop loss is 1, so negative 0.27 TP1, negative 0.262 TP2, negative 1 symmetrical price, right, symmetrical price right here, right. So let me explain a bit what these levels mean, right. So basically OTE means for optimum trade entry, right. So those are the safer points to enter, right, because we have a small risk, right, and large reward, right. So we'll be risking less, as you can see right there, right. If let's say you ended the 0.7, right, see we'll be risking from there to from here to here, right, and first TP will be here. So this is obviously a 3-to-1 ratio, right, or even more, right. So that's what OTE means, right. So you can enter this equilibrium level, right, as long as if the behavior of the candlestick is showing that you can enter, you can also enter, right. And then scaling TP, you can, if let's say you've got 5 positions, right, you can, when it reaches scaling TP, right, you can exit 2 of the positions that you have, or just reduce on the positions that you have and keep on reducing as trade goes, right. And when the trade reaches symmetrical price, right, this just means that this is the maximum point that we are looking to TP, right. But personally, I don't encourage that you use this symmetrical price for TP, right. Usually just TP1, symmetrical scaling TP, sorry, TP1 and TP2, that's it, right. And when we hit our TP1, you adjust your stop loss to the equilibrium level or slightly below it, right. And when we reach TP2, right, you can adjust your stop loss to scaling TP or even TP1. Then if you want to reach symmetrical price, you can wait for that after adjusting your stop loss to be under under your trades, so that you won't lose anything in that trade. You'll be a risk-free trade, and you've already closed some positions in profit, right. So that's how you add your levels. Okay, now for the fifth part of this video, right, how to know which levels to hold, right. So as you can see, I've got multiple levels here, right, about 4 levels that we'll use for trades, right. Personally, level doesn't matter that much, right. You can enter whenever, not exactly when it reaches, right, but for better to know if it will be respected or not, right? You look for what? You look at the candlestick, what? Candlesticks being formed, right? As you can see, we've got what? Long wick doji, right? We've got too many dojis, what? Rejecting what? The upside, right? So most probably what? This, it's showing us what? That this 62 level will be respected, right? As you can see, it went what? It went all the way down. And as you can see right here, right? We've got many weak what? Rejections, right? Showing that what? The market rejecting what? To go up, right? But at any given time, you can also enter, right? Let's say it showed you these candlesticks here, right? And it breaks up and what? Retraces here, right? You don't, it's still safe, right? As long as if your stop loss isn't hit, right? It's still safe to what? To hold the trade. You can even enter some positions at the 62 level and some positions at the 70 level, right? So this and I also forgot to mention that you can use this strategy on the boom and crash, on the volatility indices, or on any market at all, right? You can use this strategy, right? So as you can see right here, these are our first trade right here, right? You can enter right here, right? Since we're the bracket market structure retracement, we enter TP, right? And for our second entry, right, as you can see right here, we broke what? This market structure right here, broken market structure, right? Then this pullback, right? So we place our fib highest point, reduce it to the lowest point, right? So here, right, enter, right? Our stop loss is indeed scaling TP. We exit most of our positions, right? And TP1 we reduce some, TP2 exit some, and we reached what? Reached symmetrical price. So as you can see, this is a powerful strategy, right? And you keep on what? Since we are looking for sales setups only, as we had mentioned earlier, right? Just look for what? Breaking market structures, right? So here I've got a breaking market structure, right? To the downside right here, right? And this pullback, right? You just come and what? Place your fib, right? Let's say right here, right? Highest point to the lowest what? The lowest point, right there, right? You keep on what? Adding your position, right? So this pullback right here, right? Enter, scaling TP, TP1, TP2, symmetrical price. You smash them all, right? So this is just what you'll be doing, right? We've got another one, breaking market structure right here, right? And you come and place your fib from here to here, right? When the candlestick reach what? These levels, you enter again, right? And as long as if your TP is your stop loss isn't hit yet, right? You can still hold the trade. As you can see, most of the time you hit profit, right? So when you stop looking for what? For your sales setups, right? When the stop loss is hit right here, right? Because we broke what? The structure, which means our stop loss would have been hit right here. But look at about 5 trades that were in profit, right? So this won't hit much, right? So let me look at let's just take 500 and show you that this works on what? On all markets, right? So right here we've got what? Setup right here, right? We've got a breaking market structure to the downside, right? Then wait for a pullback. Take our fib, pull it right there from the highest point to the lowest point, right? Right there, right? We enter, and as you can see, we smashed our TP right here. So this is just a simple strategy, right? But if you want to know which level will be respected exactly, you can check out the video that I talk about candlesticks, candlestick momentum, candlestick patterns, how each and every candlestick, what each and every candlestick mean, so that you will be able to perfect your entries, right? So that you don't enter at each and every level, right? You enter at an exact level only when the market will be going down or up respectively, right?